Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Ben Udell, the SVP of Client Experience at LakeRidge Bank, about a $3 billion, what he calls a classic community bank. That was a really interesting discussion. We touched on what he calls a pragmatic approach to technology projects versus the more moonshot, pie in the sky, or shiny object syndrome. I think were all phrases used to describe a kind of different approach, why they take that approach, what they think the core competency is, meaning of a classic community bank. What does that mean to him? What role do branches play in that experience, and how does that fit into a technology-enabled future? We also touched on a couple other areas, including buy now, pay later. I think the interesting topic in BNPL isn't just the product, but what the innovation represents, how it came about, and why it wasn't banks that developed that innovation, and what we can kind of learn from the experience. So a lot of interesting topics. I thought it was a really fascinating conversation. So please enjoy this conversation with Ben Udell. Ben, welcome to the podcast, and thanks for making the time to join us today. I really appreciate it.
Yep, I'm happy to be here. Happy to be here.
Well, maybe you should save that until after we're done. Make sure you're actually happy to be here.
We'll have a little bit of a halftime, and we'll check in, see if we need to readjust.
We'll judge the success of it after we've done it. There's a lot of interesting things I wanted to cover with you today, but I wanted to start, when we spoke earlier, you talked about the difference between what you call your pragmatic approach to innovation, some technology deployment, and what you call pie in the sky or moonshot approaches you've seen taken by others. And I thought that was a really interesting framing of different approaches to the deployment of technology and innovation in the context of a financial institution. Tell me a little bit what you mean by the more pragmatic approach.
Yeah, I think what happens is we get so excited about all the new technology that's coming out, the technology that's available to us by providers. And so we look for these gigantic moonshot space jumps with how we're operating as a business, either internally or with clients. And what happens is, I think with a lot of these moonshots, you need to really have a really great level of technological savvy within your organization. You need to be really great with change management. There's a cost structure that goes into all of that. And so when I started thinking about that, how many of our organizations that have been doing something one way for a long time, even though we know we need to change, even though we know that we are open to change, that's still a lot of change. And so, you think about becoming more efficient. Is it some of the simple stuff that happens either with deployed tools? I think of some of the Microsoft 365 products that we already buy and we don't use. I think of just simply moving away from paper, and whether that's PDF and fillable to no code, low code. I mean, that's all really cheap, really easy. You can get a lot of simple solutions out of that makes people feel really good about just being more efficient during the day, spending their time on higher quality opportunities. So I think that's one of the hardest things we deal with is how big of moonshot do we want to make, and is the juice worth the squeeze at this point in time in our organization's development?
The juice worth the squeeze is one of my favorite phrases, but I think it's so interesting. And a lot of what I'm hearing from your description is kind of like, in some ways, the kind of front office versus back office, the kind of fancy new. I mean, we're now in the moment where everybody's got a chatbot, or at least the chatbots keep evolving, right? And the new large language models are out there, and everybody wants this kind of whiz-bangy interface. And yet so much of the opportunity is in reducing the processing time, reducing the inefficiency internally, simplifying internal operations. Do you see it primarily falling down along those kind of like external facing crazy new product or new feature or blockchain or something totally different than what you're doing? And something more like, let's kind of meet the meat and potatoes, the bread and butter, and actually like kind of fixing the internal and kind of back office elements?
Yeah, I think a really great question. Part of the backstory for me in coming into this is we literally just merged with another bank. And so you really get to start to see how people want to make some, decisions on resources and strategy and allocation. And it's not that one is right and one that's wrong. It's just different. And, I think about all this technology we might spend to add new systems or add more digital. And, I think online accounting is a really great example where we fret a lot about the quality of that client experience. But I don't think we get a lot of clients who are like, I got halfway through this online account. Forget this. I'm going to go somewhere else, right? They kind of trudge through it because they want to go with you because you have the promotion, and it still takes 5-10 minutes and they're done. And, don't get me wrong, it may not be the best experience, but they have an account that's open now and they're happy. And I think if you take that cost we could have had to go from like a B level to an A level, how much is happening in the branch where we're doing stuff by paper, we're pushing paper around, we're filing stuff into two different systems. We don't have a file system that's great for auditing, so we file this document here and then we ship something off to the audit team or the compliance team or deposit ops. And so you think about how we spend our money and resources, across our industry. We love that moonshot, but if, you think about the cost for that. If we could take $10,000 of the moonshot and invest it into a program that allows us to be simply more efficient with that client experience in the front end, or more efficient in the branch so we have time for more of our clients, I think that's where, I think especially at the senior level management side of the world, we get really excited about these moonshots, and nobody's talking to bankers, tellers, frontline staff, credit analysts about what can we just streamline that makes you better with your role, better with clients. So that to me, there's a lot of wins that can take place there. And that's partly winning hearts and minds, I think, as well, when you consider, wanting to really look after the people that look after our clients.
And how do you think about, it's another interesting distinction, which is kind of the self-driving, self-driving car, not really the analogy here, but the kind of like user-controlled, pure digital, no human interaction version of digital, right? We so often, the digital account opening is meant to there's no banker involved, right? There's no human in that process, and you're just totally self-service. It's probably a better phrase than self-driving. And yet there's also this version of technology. It's like, how do I enable my staff when you're talking to them to have a holistic picture of you and your needs and your history with the institution, to have the right processes and be the best version of, an advisor, a consultant, the banker for you in that moment, which is a very different set of technologies and processes and change management than going to a total, when I have a digital origination solution where you can get a mortgage, never talk to a human being. Well, or do I want to make my mortgage officer a more effective mortgage officer and have better tools and faster processing in their hands without trying to replace them? And I'm curious how you think about the deployment of technology and then pieces that aren't pure technology that are involved in putting those tools in the hands of a human to use in the context of a conversation.
Yeah, what I really think about, and I think about this a lot as I talk to my friends and peers, and you go up to some of these conferences and you kind of, over lunch or over drinks, you talk about what everybody's doing. I think what I really find is everybody wants to move forward in really big ways to be more productive, more growth, more successful, but they really seem to lose sight of their original strategy that they want to carry forward. So back to this moonshot idea with a lot of how we talk about technology, for us, we're a community bank. We're serving, the South Central part of Wisconsin. We've got 20 plus locations. I think in many ways, we are very proudly a classic community bank. And how many of our clients in these communities only want digital? Or how many only want this face-to-face? So from our strategy, we're trying to provide that solution that's you can bank with us digitally, or you can bank with us in person, or you can contact us. And I think what starts to happen with some of this decision-making, this bright, shiny object, that moonshot, is we start to get out of balance and how we're trying to work with our clients. And so I think for me, it's very much about the strategy focus and who do you want to be and how do you want to apply that and how does that fit? And I think we wrap our decisions around that relatively well. And, I think that's what helps us be successful with clients, at least in our marketplace. And I think if you're the digital player that really wants to have, that A+ digital only experience, wonderful. If you want to be this high touch, high in person, white glove treatment, wonderful. I think it's when we start veering away from those too far that we need to come back and find some balance with how we're operating as an organization.
I think the phrase "a classic community bank" is interesting. How do you think about the strategic, what is the strategy? How would you encapsulate what it is that you can do differently and differentiate as a classic community bank in the new age? What does that strategy look like for you?
Yeah, I think what it looks like for us, and I think in many ways for a lot of classic community banks, we want to be able to bank how clients want to bank with us. And the reason I say that is we're not going to have the resources to have an amazing digital experience that's going to compete with the Bank of America. But I do think on the flip side, we can have a stronger in-branch experience that's going to be better than some of these larger players. I think if we invest wisely in the digital side, we can be stronger than some of the smaller financial institutions in our world. And I know they're going to say they want to compete on that customer experience. So I think it's trying to find both of those. So we're not going to be, again, really amazing at technology, but we're also going to have, I think, this real strong commitment to clients. I think we have to start thinking then about what does that really mean? Because everybody listening to this podcast is going to say, well, Ben, we have an amazing commitment to our clients. And I think that the question is like, what does that really mean? And so like for us, that means you walk into the branch, we're going to be able to solve issues and topics within the branch. We're not kicking them off to somebody else. We don't have to make phone calls to answer solutions. We don't have to get back to them. They're empowered to help clients. They're empowered to waive fees if that's an issue, right? I think when you call us, with a one phone call, you're getting in touch with a live person, something that I know is difficult to do in these days, right? When we communicate to individuals, we're using our names. If you need to follow back up to an email that I sent you, you can actually find me, and we make it easy to find me. So, not that those are solutions for everybody, but when I think through, how do we validate that? When we say we want to be a strong player in the community and be easy to work with in person, that's what that means. And then, we'll build out our online and mobile to be, pretty darn good too. Maybe not A+, but pretty darn good too. And clients are going to be happy with that, right? Because they're getting a fair deal and they enjoy working with us. We are their advisor.
Well, you use another phrase there that's, I think, a classic one in Silicon Valley, shiny object syndrome, which is, I think, this question of like, is the A+ digital experience really the thing that wins a client's trust, that wins a client's business over time, or is it something else? And you can pour a lot of money into having the slickest digital experience. And frankly, if you're trying to keep up with the big 4 or 5, like their annual tech budgets look like most people's operating budgets,
yeah, absolutely.
Right? So you can't really compete on that level. But the question is like, is that what it takes to compete, or does my client want something simpler, and do I pour my resource into something else?
And I think it's important. They're table stakes, but if you look at a lot of the studies that come out, people want an institution that's nearby where they live, maybe where they work. They want a low fee situation. They want easy access to the money, which is often interpreted these days by, ATM, digital payments. And then what else do you need? You need mobile deposit, you need an app. Like those are all basic table stakes. And I'll tell you, when we, talk to my team, or we talk to bankers about what are clients asking, the customers aren't coming in saying, no, I need to compare your mobile app with this other bank's mobile app before I make a decision. Like they're coming in because they looked at your website and they looked at reviews and they called you, and it was just a welcoming environment that, people think they're going to have a good relationship with, right? We spend all this money on stuff that people are going to figure out after down the road. And I'm not even sure that's a retention topic for a lot of these topics either, right? If your mobile deposit is clunky or slow, I can't imagine you're going to have very many clients who are like, I'm out of here, right? They're going to...
Yeah, I can't say as I've opened up 5 mobile banking apps to check the mobile check deposit and go, hey, this is my deciding factor on where I'm going to bank is who's got the slickest mobile check deposit capability.
I agree. I think it's such a great case for our marketing friends, and the brand you're creating and putting out. Is that a brand that's welcoming to your community? Or, I have some friends that work at banks that have some websites that are very much created by bankers, longtime bankers. And, for our family members that are not in banking, they don't care. It doesn't make any sense to them. So, yeah.
Where do you see the branch fitting into the future? Like, what is the future? We've talked about the branch and the kind of experience you can deliver there or on the phone being a differentiator, but how do you think about the way the branches work, how you change your strategy with what the branches are intended to do, built out for, and what kinds of interactions you expect to happen in the branch as you move forward?
Yeah, I think about it from this perspective. I think branches are not going away. Of course, they're consolidating. They're getting smaller. Some people have a strategy with no branches. Wonderful, right? But big pictures, they're not going away. So what I think about is, why are people coming to our branch? It's probably because they need to open an account, right? Checking account online, they don't want to do it, or checking account lending, they don't want to do it online. So how do we make that process really streamlined so we can use that time to build a relationship? I think people are a luxury these days. And I wish I knew where I heard that quote from, but I think that's so true with, how often you need support and you just can't talk to somebody quickly or somebody in person. So I think it's solving that. But most people come in, we have 2 checking accounts. We're not spending time talking about how they're going to use the account. We're going to, this one or this one, here's the benefits, and then we go for it. We get everything set up, and that needs to be easy. I think the other thing is it's this problem solving, right? They don't want to go online. They don't want to make a call, or they try to do that, and it's just hard to communicate. So that's a very different model than transactional based. I think what that means is there's something to be said about investing into an inviting environment. I think a comfortable environment. You offer, crappy coffee that people don't want to. They're gonna leave half of it because it's junk, rather than sit there and talk to you because it's enjoyable. I think about how investing into the property of being first class and it looks like you can take care and secure money. I mean, all of us can think through driving through town and seeing different levels of, shall we say, repair of certain businesses, including banks. And, who's going to drive into that bank if you have a choice? Right? You got 3 banks to choose from. Why would they take a hard right into yours and go park? So, I might be getting a little long-winded there, but I think we really have to think about, if people need everyday transactional items, they're probably not coming to the branch. It's because they have a financial need to open an account, to talk about a loan. They have a problem. And I think we're also seeing a lot of the studies say that the younger generation, they know that going online can be a little challenging for accurate information. So when you see somebody that is younger in your branch, that might be the only time all year they visit, and you cannot spoil that opportunity, right? I think maybe I'd summarize that all by saying, I think where we're at is the value of in-person is much higher than we think it is. And we really got to recognize that and have a really strong approach to how we're interacting and engaging with clients in the branch.
Are there things you're doing in terms of how you train branch staff or how you prepare people? Because I do think there's this massive shift going on, not recent, but kind of continuing, which is kind of the shift from transactional interactions in the bank, in the branch, to something more consultative. I'm not coming in to deposit a check anymore. I'll do that on my phone. I'm coming in to ask a question. And so I don't need people who can just deposit checks and hand out cash. I need people I need a staff that's prepared to handle difficult questions as a predominant role that they're playing in the branch. And how do you prepare the staff for that reality? Because it's kind of a different job in some ways than it was 10 or 20 years ago.
And I think if we looked at the average age of our bankers, for instance, the banking team is only getting younger. And if they're getting younger, they have different life experiences. So it's a different conversation when you've, never opened a CD or a money market or a home equity, or, you have a small credit card because you're scared of credit. And now you're talking to somebody that has an established financial picture. So there's 2 things that stand out to me when I hear that. The first is, I think, examining the products that you have. If your products require math, if they require fine print to understand, how is a banker who's under the age of 30 really going to, quote, sell this product? How are they going to explain it? I think we often think about, we need to coach and train bankers to sell our products well. But if you're trying to sell them a complicated product, it's not a lot of selling. It's a lot of telling. It's a lot of explanation. And I think that really makes the banker's job more difficult, and then it doesn't connect well with the customer. The other thing that comes to my mind is we as bankers, we really love to put rules together, and we love to have things black and white. And if you think about why people leave a bank, it's because of customer service and fees, right? And those are very interrelated. But what I think about is, how do we empower our frontline staff to just simply take care of issues and do more? I mean, when you get down to it, there's not a lot of activities that bankers can do unchecked in a branch that's going to crush the bank, right? So they gave away $400 in fees on accident. Not the biggest deal in the world to banks, right? Maybe they gave out an exceptionally high interest rate. Not the biggest deal. It's kind of hard to screw lending if you think about centralized underwriting and computer systems that we have. So, I think a lot of when I talk to peers, they put these restrictions on what a banker can and can't do. And the reality is it only makes it harder to service a client in the branch. It makes it harder to build some loyalty. It's more friction for a relationship. And I think really examining that is a way to win some hearts and minds with your team and with your clients, and it just makes some things easier in the branch, right? The last thing you want to do is have somebody walk in the branch, they can't get an answer, they got to call their manager over, they got to elevate it up the chain, and that's not loyalty building.
I love that. I love that story and that concept. Like, I think a lot of organizations are trying to figure out how do we push down authority to the person who's in the room and has the most information to make a decision. But also, it reminds me of, I think, one thing, so many financial institutions kind of can go astray in the sense of risk management being prevention of any kind of risk. You go, well, like, how badly can they screw this thing up? And are we willing to take that risk given the costs that might be associated with it? Or do we lose sight of the upside of giving that branch employee the ability to make the decision in real time? Like, will they do exactly what the centralized risk management team would have done? Probably not exactly, but how much is it going to cost us, and how much goodwill do we build with the customers by enabling that local employee to do something like, am I making a good trade-off when I put tons of rules and restrictions around that employee? And I think sometimes we optimize for the risk minimization as opposed to the right balance between empowering those lower level employees and building customer respect and loyalty.
Yeah. I think what I see happening in FIs, as I kind of talk more broadly across banking with peers and again conferences and whatnot, is we're making these decisions in vacuums. So we're making a decision about, I'm only going to let bankers waive up to $40 in fees before I need to get a manager involved or it needs higher level approval. Well, the whole time that client is just ticked off, right? The banker can't fight for the client. And then over here in this bucket, you might have a finance team or a strategy team saying our average client is here for 8 years and we make X hundreds or thousands of dollars on the client. Like, theoretically, for us to give away so many fees to now break even and lose money on our clients as a portfolio, it's way higher than $40. So give away $100 and move on. Or you think about these programs we run where we give away, cash or incentives. Like, in some ways, it's almost like if I'm willing to give away $300 for a new client relationship, I almost feel like you'd be willing to give away $300 in fees, because what's the difference, right? You want the client, you don't want the client. And it's not perfect math, of course, but it's these things happening in a vacuum. Or, another example, our risk or compliance team or an operations team or the branch too, we're all in this together. You make a decision because this happened, and then it goes down the chain, and all of a sudden people are like, but I can do this task over here, and that's way more risk. Well, that we didn't look at it as a whole. We didn't have this evaluation tool. We just said something happened once, so I'm going to adjust for it, and then we don't realize how the unlevel that kind of playing field is for everything else. So that's what makes it fun, right? But it's also creates a lot of opportunity. It keeps me busy.
Yeah, I love it. There was one other topic I wanted to bring up and get your thoughts on, which is kind of the innovation in the payment space, particularly the buy now, pay later. I know we talked about this a bit, and what is it that has driven the adoption? That in some ways it's not a new product. I mean, buying something and paying for it later on credit is like, we've had that for a long time. Yeah. And is also something that came from outside the banking sector. So what do you think it was that is driving the interest in that product? And why wasn't it something that financial institutions came up with a while ago as a way to bring consumers on?
Yeah, first of all, I think buy now, pay later is one of the more fascinating consumer topics right now. I mean, the ability for really non-financial players to do a better job at marketing financial products is wild to me, right? I mean, that should be very interesting and eye-opening to everybody in our space. What I think it is we are so tied into our legacy of how credit cards work and how personal loans work, that as soon as we have to start getting out of that box, being a little more innovative, it's just really challenging. And I get it. There's compliance needs and there's exam and audit needs. And we as bankers don't like to take some of that risk. But I also wonder out loud, how much of that risk is what we're imparting on ourselves, right? If we do a buy now, pay later loan versus a credit card for $500 to somebody, like it, and I'm going to have my compliance or my risk management friends maybe push back on that statement. But, big picture, what's that big risk, right? And so I think you take that, and even without doing something innovative, I just think this is a great case of these innovators understanding the marketplace better. I saw a stat recently that surprised me. I didn't have the data behind it to quote it, but the number of millennials and Gen Z who don't own a credit card or never use it is exceptionally high. And so here they are going to buy now, pay later, which they might end up spending more money on versus a credit card with rewards through a partner that they could potentially walk into a branch to solve issues with. And I think it's that disconnect of marketing between who our marketing teams are comprised of in the industry. We've got 25 years of experience, but I'm not 25 years old again. So what, it's hard to understand. And I think this is this great case of really using our resources internally within our own financial institutions and understand there's just this lack of connection. And I think maybe one other way to wrap that up is we feel often like, is that really are we going to get an ROI out of it? And I mean, maybe not today, but it's part of an overall package of developing longer term relationships, which, candidly is kind of funny. We'll get, virtually no ROI on some of these junior savers accounts and some really early checking accounts because we know they're going to build into something more. So why don't we do that in credit and help people build credit and have a program around it? And it's not just about lending money. It's about that education piece. So, again, I'm kind of rambling on that, but I think, that's hard for us. That's hard for us when you've been around for a while. I get it. But
I also think it's there's interesting. I love your reaction to this thing that occurs to me, which is like, I feel like there's this, kind of easy ability to dismiss just buy now, pay later, as a simple example, but where you go, well, I mean, customer could already do that if they just used their credit card and then paid it off in 4 months. It's the same thing, right? 4 payments over a month, it would cost you not. But I do think that, there's this, particularly in a numbers business like financial institutions like banking, it can be easy to kind of assume rationality. And maybe one of the biggest mistakes we all assume is that people behave totally rationally by the numbers. And the reality is consumers reacted differently to a no interest installment plan credit than they do to a credit card, particularly after the financial crisis and so many people caught up with credit card debt. And I think it's easy to go, hey, we don't need that. We got a credit card. They could use the same thing. Why would anybody do that? And to miss the point that consumers actually really like it, whether or not it's meaningfully different in some ways or not. They do, and we kind of have to react to that. Maybe it's lack of rationality. Maybe it is a behavioral economics. I mean, it's rational, just not in a numbers and cents way, in a human behavioral economics, psychological way. But I think it's easy for us to miss those things, those trends.
Credit is such a funny thing to me where it's inherently so easy to think about how we personally use credit, and we will just automatically struggle. And I know people use credit differently, and I still struggle with how would somebody use credit and how do they want to talk about it? And that's much harder than a checking account for sure. Yeah.
Well, it is. I do think it's interesting that we are seeing now real innovation in the credit products being offered. I mean, BNPL, if nothing else, it's a different expression from a user point of view, like it's a different product. And for many years, since credit cards, we've had kind of the same rough products in terms of what the pricing may change and the rates change and we make it easier to get and whatever. But a fundamentally different kind of actual offering to the consumer is a bit new. And we're seeing that in investment with robo-advisors. And I think it's interesting to see that evolve and that innovation, though I do think ultimately we will find, financial institutions and the trust they garner will be where people want to turn for those. But to me, it's interesting to see real innovation in the actual underlying offerings, which is a little bit more rare.
Yeah. And I think even the simple piece of just personal loans, we're an organization that it just hasn't been bread and butter. It's been certainly home equity, certainly mortgage, a little bit of credit card. And so I think inherently we feel like, should we do that or not? But when you start looking at the math, there is a huge volume of personal loans every year. And you take a step back and say, well, what percentage of the population doesn't own a home? So they can't get home equity. What percentage of the population doesn't want to use home equity? And all of a sudden, you've got this gigantic marketplace for helping people with personal loans. And, it's one thing to think whether we should or shouldn't do it, but it's another to then take a step back and say, somebody else is doing it. And are they going to do a better job and then now take this relationship from us? So, what point do we really have to get to that point of saying, we just have to be really good with this as well? It's a bit of a defensive play as much as it is an offensive play.
That's a really interesting point in the personal loans. And I do think it's also the point you made earlier. One of those examples where I go, well, I don't, why would someone I don't need such a thing, right? But yet that kind of bias we all naturally have to our own use cases, the way I would get a home equity line if I wanted to do that, or I would, but that's the bankers assuming that the average customer looks like them is a sure way to not get in the right place for products, because the average consumer is not nearly as informed and uses credit differently than the average banker. And so I think it's one of those things people miss because of the personal bias of saying, hey, that's not something I would feel like the need for.
I think kind of just a funny personal example is I traveled for a wedding recently with a bunch of friends to go see, our friends get married. And so you go out to dinner, you go out to drinks, and, you either do everybody buys around, or you kind of say, just put it in, we'll all split it 4 ways, right? When I have 4 different, credit or debit cards sitting on the table, and a couple of my friends are more financially inclined are like, why would you have that card? I'm like, why would you have that card? And it's like imagine, for a little market research to go out with friends and family and split it and say, why did you get that card? And some people are going to be, this is the best points card I can get, hands down. Others are going to be like, I like the design, or I've had it for 20 years and it's the first one I pull out. And that's so informative to us, not about maybe how we're going to market to our clients, but maybe more informative about what we are marketing is maybe not hitting the spot. Maybe it's not resonating because it's too narrow of a message for such a broad audience.
Love it. Well, Ben, this has been a fantastic conversation. I've got 3 questions I end all my episodes with.
Perfect. Let's do it.
You ready for them? All right. Question 1, what's the best piece of career advice you've ever gotten?
Yeah, the short version is when I was much younger, I had a manager of mine and I was interested in this job. And he said, Ben, what do you want to be when you grow up? And I said, I don't know. What do you want to be? And he's like, I'm asking the questions here. And his point was very clearly, most of us don't really know what we want to be when we grow up. And his guidance to me was, most people don't. So what are the experiences? What's the knowledge? Where do you want to get involved? What do you want to try? Who do you want to get to know? Do all of that, because through time, if you do that with Ernst, you're going to start figuring out, like, I'm really good with this. And funny things happen when you focus on areas you do well. And I don't enjoy doing this. So then you stop doing it and maybe you're more fulfilled and you're not, we all think of our friends who are in this role and in roles where they're like that. You're going to burn out. You are not good at that job, right? And so I thought that was really interesting. And I've always tried to impart that on people I work with and mentor on. Don't worry about it, but figure out stuff to learn and get better at and get involved in and test yourself. And this bubble is going to grow in weird shapes, and that's just fine.
It reminds me of the one of the most famous commencement addresses ever, Steve Jobs' at Stanford, when he said, you can only really understand a career looking backward, but you can only live it going forward. Like, you don't really know where you're going to end up, but if you follow the things you're interested in, it'll make sense when you look back, but you probably don't see where it's going to lead.
Absolutely. Everybody wants this specific next step. And it's like, I don't know, take 10 baby steps and then see which one you rise up rather than fall down on, and keep moving. Keep moving.
All right. Second question. What's the best piece of advice you've gotten about the consumer banking space in general?
Oh, that's a great question. I don't know if it's so much the advice I've been given specifically, but I think over time, it's just this reminder that when you live and breathe it every day, it seems so easy and you forget about what that standard average person is like. And I think the better job we do of asking our friends and family, like the card example of having your cards in the middle of the table, what would my mom say? Does that make sense to my dad? Is my niece going to be okay with that? That would maybe tick off my sister if we did that. And I think, using your friends and family to really say, that makes sense. That's good advice. I think of some of the banks that have gotten themselves in some ethical issues, right? Would your mother be ticked off if you did this to her? Yeah, hey, back away. But I think it's also like back to the marketing decisions we make as well and the product development decisions. So again, not a specific piece, but holistic that we always talk about through time.
Yeah, I remember when I was at Google, there's a similar thing where Eric Schmidt used to say to the whole company, go like, just every email you write, like assume it's going to end up on the front page of the New York Times. Would you be proud of what you're saying in that email? Because welcome to the big leagues, guys. It may actually end up on the front page of the New York Times. So you should be willing to stand behind the things you say, even if it may be uncomfortable to have to do it publicly. You shouldn't be embarrassed or go to I really shouldn't have said. You should be able to take pride in the way you make decisions of the things that you do and be able to defend them with a straight face.
And I think that's the same thing for speaking up at work when something's not working well or you need to present an opposite opinion or perspective. How do you feel comfortable being a part of the solution?
All right, last question, Ben. Here we go. What is one bold prediction for the future?
Oh, bold prediction for the future. I don't know if this is bold. I really worry about losing more of our smaller financial institutions. And I believe, Jeff, when we talked, I think we talked before. Did we talk before? No, we talked after Silicon Valley, right? Yeah. And it's just this other example of how taking systematic risk out of, or I shouldn't say system, the organizational risk out of the system and valuing community organizations. I just think the pace of digital technology, the pace of change, that's all moving much faster than how a lot of our organizations are keeping up with it. Another great example right now is AI, and I've been playing around with it, and it's amazing how it can help you with just day-to-day easy things that I would have to search forever to find. And I type it in, and this is the expression that I want to put into Excel. And there's just not the resources to maybe keep up with the Joneses for that. And that's going to crush, I think, a lot of community-focused organizations, smaller organizations, and it's just not healthy. And I don't think a lot of these organizations think that. And I think that's probably maybe to really answer your question. I think that's what worries me, and I think that's the hot take is if you asked a lot of banks our size, they'd worry, but they wouldn't be ready to make big changes.
Yeah, I worry about that too, because I think you're maybe saying policymakers and legislators see the reality of the value of the community institution today, because what I've seen is as people are getting nervous about their regional bank or their community bank, and they're saying, hey, we're going to go move our checking account, or I had a checking account at SVB and now I'm going to go somewhere else. And they call up Chase and they go, how do I say, well, I'm a new digital first company. What's your address? I don't have an address. We don't know how to help you. Right. Or, I'm a new restaurant opening up here. Well, how do I, those small businesses in particular really rely on the capabilities of community financial institutions to support their growth. Yeah. And I think it's easy to think you can do everything digitally, but I think those investments in the community are going to be hard to replicate for the large national banks. And it's a real service to the American economy and to the small businesses and their employees. Absolutely. To have those institutions out there. And at least I see from some of the comments from the Fed that they kind of get that, and they want to make sure we're not in a position where the sense that the big four banks are safe and everybody else is, even your deposits are at risk, causes a flee from the community institutions that causes their demise. I think that would ultimately, at least as it stands today, be a real detriment to the
totally. And I think a lot of times we think about it is just money solves this, right? Money adds the digital products, it improves the experience with digital transformation, it improves the branches, it allows you to grow branches or I should say add branches or renovate. But there's a talent gap that's going to start to exist. AI will go back to that. If there's one or two people in your bank doing work with AI, and you go to a much larger organization and there's 50 people doing it, I like to use often 2 plus 2 can equal 4, or if there's 50 people in an organization, 2 plus 2 equals 8 or 9 or 12, like that, just that exponential rate of growth that happens from these efficiencies and uses of transformation. It's just, it really is kind of mind blowing. You think about the spread between some of these organizations these days. So that's going to be tough. It's going to be tough. It's going to take a lot. So that's why we're here.
That's why we're here. That's what makes it fun every day to show up to work, right?
Right.
All right. Well, Ben, thank you so much for your time today. This was a great conversation. I appreciate you joining us for it.
You're welcome. I enjoyed it. Thanks, Jeff.